So very good morning everyone. So now we are going to cover the most important and the demanded concept, depreciation, read with section number 43. So section 32 read with section number 43 called as actual cost. Most sought after question in entire PGBP is a depreciation adjustment. A separate question for 5 marks or a very important adjustment also can come for 5 to 6 marks in exam. So one of the most important things to learn in PGBP will be depreciation. But I will go one step forward and tell you what are the most important aspects in PGBP to be remembered. Number one is depreciation. Number two, scientific research. But scientific research once upon a time is a problematic part. But now it is no more that much problematic because everywhere scientific research, whether revenue expenditure or capital expenditure, it will be allowed at 100% rate. So that's not a problem. So I won't take 35 section as very complicated now because once upon a time there used to be so many percentages. So 125%, 175%, national laboratory 1%. When you do it for in-house research, another percent. So now everything is vanished. Only 100% is allowed. So that's not a problem. 35 AD. So I will tell section number 32, section number 35 AD, and the next one is section number 36. Very, very important. 36. Very important for exams. 36. And section number 41.1 and 41.3. Deemed income concept. After that, the next area is 43. Actual cost. Next one, compulsory question will be there from 44. Means 44 AD, ADA, AE. Okay. Whatever I said now, most important na, on all those, today you will be getting the videos. Okay. First I will upload depreciation. Next depreciation with actual cost. Next one 35 AD. Next one 41.1. Next one 44 AD, ADA and AE. Okay. So definitely you will be getting at least 8 to 10 marks from the discussion that we are going to make in the today's particular videos. Okay. All are short videos except depreciation is a 40 minutes video because everything in depreciation I have to cover. Okay. Let's begin. These are all the concepts we need to cover in depreciation. Okay. These are all the concepts. First one, meaning of depreciation, conditions to claim depreciation, ownership in relation to depreciation, depreciation in relation to fractional ownership, active use versus passive use, assets qualifying for depreciation, method of depreciation, rates of depreciation, block of assets, actual cost, written down value, additional depreciation, balancing charge, capital gain versus in relation to depreciable assets, and unabsorbed depreciation. Once we complete all these, each and every minute detail of depreciation will be completed. Okay. Let us begin with depreciation aspect. Meaning of depreciation. Depreciation represents a loss or a decline in the value occurs over a time period. Next, conditions to claim depreciation. 4 very important conditions are there to claim depreciation. What is the first condition? Assessee must be owned by, asset must be owned by the assessee. Means assessee should be the owner. Sir, owner means which owner? Registered owner, beneficial owner, which kind of owner? Owner, that's all. Any ownership is claimable. In order to claim depreciation, assessee has to show that the asset is either wholly or partly, in case of co-ownership, owned by him. Means it should be owned by him. When I say owned, documented ownership, technical ownership. Technical ownership is important. Means you should be given with complete possession of the asset to use it. Whatever you want, you can do on that asset. That rights if you have. Real ownership is with whom law will not see. Substance over the form is the subject matter of discussion. What is it? Substance over the form. So substance is the important, not the form. Documented formula whose name is there, irrelevant. Who is having complete possession over that asset, who is having complete control over that asset, that person I will call as a owner under PGBP. So it is only the owner who can claim depreciation. Registered ownership is not required. If registered ownership is there, okay, but that is not the requirement. See, exclusive possession rights and full control over the assets is mandatory. That's called as owned. Owned here does not represent documental owned. Who is having ultimate exclusive possession and full control over the asset, that person I call as a owner, whether his name is there in the documents or not. That was held in Mysore Mineral versus CIT, Varanasi Auto Sales versus CIT. In both the case laws, that was decided by the court. Next one. Depreciation in case of leasehold asset. Lease is of two types: operating lease, finance lease. Operating lease is a temporary, finance lease is substantial life will be there in the hands of lessee. Since a substantial life, possession and control is in the hands of lessee, lessee claims depreciation in case of finance lease. That was held in Industrial Financial Corporation versus CIT and ICDS Limited versus CIT case. Okay. So, see here. In case of operating lease, lessor claim depreciation. In case of finance lease, lessee claim depreciation. Lessee claim depreciation. One very, very important explanation is there in the Bear Act. Okay. I will not tell this. I will tell the summary. I will tell what's a summary, because this is not a regular class to read the Bear Act. So, I will tell you what is required. If lessee incurred capital expenditure, for example, there is a operating lease. There is a operating lease. Means temporary period, 1 year, 2 year asset will be given. Life of the asset is 30 years. 2 years given on lease to someone. 2 years given on lease to someone. Now, who will claim depreciation? Lessor claim depreciation. Correct? Point number 1 completed. Point 2. But lease asset is given for 3 years. Very less period on 30 years basis. 30 years, 3 years, 10% life is with you. 90% life is some other person. So anyway, 3 years like lease was given. Exam points, all are exam points and case laws. If you leave now, you are digging your own grave. So please listen. Point number 1. Lessee is there. Lessee has taken operating lease. Generally, lessor claim depreciation. But what happened in this case is, lessee taken a 3-floored building on lease for 3 years. 4th floor la one shed, temporary capital expenditure incurred. Who incurred? Lessee. Okay, incurred by constructing a temporary shed. Capital expenditure incurred. Now, on that capital expenditure incurred exclusive by the lessee, lessee claim depreciation on that part. Even though it is an operating lease, that part of capital expenditure is exclusively met by lessee or not, he will only claim depreciation. Where the business or profession of the assessee is carried on in a building not owned by him, but in respect of which assessee holds a lease. He is not a owner, but he is a lessee operating. And any capital expenditure is incurred by the assessee for the purposes of business or profession on the construction of any structure or doing any work by reason of renovation or extension or improvement, etc., then the provisions of this clause shall apply as if the said structure or work is a building owned by the assessee. To the extent of that particular 4th floor structure created by lessee, lessee will be deemed as a owner and claim depreciation. The words used are is incurred by, and therefore only what is incurred by the assessee are allowed. Any capital expenditure incurred by lessor, later reimbursed by lessee, do not attract the benefit of explanation 1. Regular class lab, we will enjoy like anything, all these provisions, but time is not there. I can explain in simple points and we'll conclude. See, capital expenditure incurred by, that's what the provision used here. Is incurred by is a word. Who should incur? Who should incur? Lessor should incur, lessee should incur. Lessee should incur. Lessee should incur. Incur what? Lessee should incur capital expenditure. If lessee incurred any capital expenditure, to the extent of the capital expenditure, he will be deemed as a owner and he can claim depreciation on that asset. Okay, but any capital expenditure incurred by lessor, later reimbursed by lessee, is not incurred by lessee, is incurred by lessor, reimbursed by lessee, you will not get the benefit of depreciation claim. Next, depreciation, next, come back. We discussed about ownership. That's why we discussed about complete ownership concept. Used for the purposes of business or profession. When I use the word used for a business or profession, it did not tell. Used for the purpose of business or profession. That's why real using is not important. Put to use is important. Means what? Are you keeping it available for use? If I really want, am I able to use it? Yes. Claim depreciation. Example, spare parts of a machine is a capital expenditure, capital asset. Spare parts. When you will use, when requirement comes, necessity occur, then I will use. Why unnecessarily we will use spare parts every day? Yeah? Fire extinguishers will be there. Fire extinguisher units will be there. Big units. Okay. Put to use, when you will put to use, daily you will put to use a fire extinguishers. No. But that is a capital expenditure only. You can claim depreciation. Na? So therefore, understand. Always when you have an asset, that does not mean you have to put it for use. You have to really put it for you. Is it made available? Is it made available? Fire extinguisher is established there, attached there, mounted to wall. If really risk occurs, am I able to use it? Yes, sir. Claim depreciation on that. Okay, that's why purpose of business or profession is important, not real usage in the business. Next, it must be used during the relevant previous year. During the relevant previous year. Depreciation is allowable on both tangible and intangible assets. This one already we discussed. Depreciation in case of hire purchase. Simple. Hire purchase la, we will be paying higher installment. Last installment la, hirer becomes the owner. Hirer becomes the owner. But lawmaker through a case law said, CIT versus General Industries Corporation Limited, CIT versus Nagpur Golden Transport Company Limited, Karimji Private Limited versus ITO, VLS Finance Limited versus CIT. In all these case laws, there is two conditions that they said. If two conditions are satisfied, hirer can claim depreciation from the first year of his hire itself. You need not wait till the last year. Sir, I will become owner on last year. Therefore, I have to claim depreciation on last year onwards only. By that time, life of asset is over. So therefore, hire purchase agreement clearly show that as long as hire payments are made, hirer has enough uninterrupted possession over the asset. That condition you should be having in the hire agreement. Means in the hire agreement, it was written that until and unless you pay regularly my hire installment, complete possession, control, ownership, everything will be in the hands of hirer. Like that in the agreement, it should be there. Seller eventually loses the title over the asset on the payment of last installment. If both the conditions are satisfied, hirer can claim depreciation not at the end of last installment. From the first year onwards, he can claim depreciation as if he is the owner. Next, depreciation in case of fractional ownership. Section 32(1) it is there. They use the word owned wholly or partly. Sir, how I have a part ownership? Joint ownership. If two people purchase a property, then you will have fractional ownership. Then depreciation also will be as per the fraction. 60%, then total depreciation to 60% you will claim. Total depreciation to 40% other person will claim. Active use versus passive use. Active use versus passive use. Sir, what do you mean by active use, passive use? Active use means daily you are really using in the business. Passive use means kept available for use but not actually use. Fire extinguishers, all these examples. Okay. The word used must be understood in a wider sense to cover ready to use also. CIT versus Geotech Construction Company Limited. All are Supreme Court case laws. Depreciation can be claimed on a defective and non-functional asset provided it was purchased bona fide by the owner. See, in the questions in exam, they may intentionally twist you, like law examination, what torture they have done. Listen, there is an asset. I purchased it. I wanted to put it for use, but it became non-functional. It became defective, non-functional, without my mistake. I did not intentionally do this, but I purchased it with a bona fide intention. But machinery is not working. Even on that, you can claim depreciation, provided intention is good within you. CIT versus Sri Chamundeshwari Sugar Company Limited. Depreciation can be claimed also on those assets which are kept idle by force or non-occurrence of any event, fire extinguishers and spare parts. Depreciation can be claimed even if the asset is put to use for trail run, since it is in relation to the business or profession of the assessee. From the trail run itself, we can tell that asset was put to use. Ashima Syntax Limited versus CIT, CIT versus Union Carbide Limited, Aura Foods Limited versus CIT, Mentha and Allied Foods Limited versus CIT, Jaipur Sugar Limited versus CIT. In all these case law, it was said that trail run, if you put a machine, I will tell that it is put to use. Put to use means need not be for commercial purpose. Commercial purpose ki if you use, but trail run also put to use has started. Next, assets qualifying depreciation. Tangible, intangible. Tangible, building, machinery, plant, furniture. These are the four assets which are eligible for depreciation. Intangible, know-how, patent, trademark, copyright, license, franchises. Goodwill will not be included. Capital gains chapter it will come. So building, machinery, plant, furniture. Okay. Any asset comes under these four categories. That's why I always tell BMPF. Building, machinery, plant, furniture. Building, easy. Okay. Furniture, easy. But plant machinery, okay, what will come is a question. See, books will come under plant category. Books will come under plant category. Okay. Let us understand certain points. Method of depreciation. So we completed assets qualifying depreciation. I am going very fast. Depreciation adjustment we need to understand. In case of a company engaged in generation or distribution of power, what depreciation method they will use? SLM. Actual cost 1 lakh into percentage 20%. Means 20, 20, 20, 20, 20. 5 years the asset will come to 0. Okay, if you use SLM. That's why SLM can be used not by all companies. Companies which are engaged in generation and distribution of power, they can use SLM basis such that actual cost you take into percentage of depreciation you apply. That's it. That will come to depreciation value. Everyone understood up to here? Next. If it is not a company engaged in generation and distribution of power, then in any other case, WDV basis depreciation will be claimed. Okay, WDV, how to calculate? Very, very important. WDV of block of assets, not books of accounts. WDV of block of asset. Independent asset WDV is not required. So in case of WDV, as I said, A, WDV of the block. Block has a WDV, not independent assets. Okay, WDV will be calculated as per 43.6. Block of assets is defined under section 2 clause 11. Okay, next. B, rates given in the rules. Okay, rates will be given depreciation rates, that rate. Then that will become the amount entitled as depreciation under section number 32. So WDV important. A, WDV of block. How to calculate? 43.6 into rates. Okay, WDV means what? Block of assets, WDV we need to consider. So WDV is one word, block of assets is another word. WDV is clear, understood under section 43.6 and the block of assets under section 2 clause 11 into rates will give you the amount of depreciation. See, buildings. Buildings used for residential purposes 5. Hostels and other things 10. Okay, next. If you are using that building for water treatment plant or any supply project, it will be used in a more commercial purposes, and the purpose of usage is more industrial in nature. Depreciation will be at a higher rate. 40. Temporary erections, I told you, fourth floor constructed, those also have a depreciation of 40%. So buildings 4 blocks are there. Okay, buildings 4 blocks. Residential building, hostel and other buildings. Next one, water treatment plants and other wooden structures, temporary. Those are 40. First one is 5 and next one is 10. Next one, furniture and fittings. Furniture and fittings. If it is a furniture and electrical fittings, 10%. How much? 10%. Plant and machinery. Sir, plant and machinery, you need not remember all these things, but in general, plant and machinery will be having a 15% rate. How much rate here? 15% rate. Next one, very important is books owned by SSE carrying on business of running and lending libraries. So I have a library, for the books I purchased. 40% depreciation on the books. Okay, books. Annual publications are other than annual publications owned by SSE carrying on profession. How much? 40%. How much? 40%. So books, if it is books, then 40% depreciation will be allowed. How much? 40%. Computers including software. Software also allowed at 40%. Windmills, 15%. Which kind of windmills? Specially designed devices running on windmills installed on or before 31/3/2014. See, anyway, one thing is very clear. Yeah, all kinds of windmills and electricity producing, it will be 40. Energy saving devices 40. All comes under life saving equipment 40. See, 15% is for general plant. Books 40%. Books 40%. Next, windmills designed before 31/3/2014, 15%. Generally, they don't test those. Sir, anyway, you have to remember 15%. And next, very important thing to remember is aeroplanes and aero engines, 40%. How much? 40%. Next, motor cars other than those used in business of running them on hire, acquired and put to use on or after 1/4/1990. Means a normal usage, business purposes normally we are using. Then 15%. Okay, next one, acquired during the period 23/8/2019 to 31/3/2020 and put to use before that, 45% is given. Motor buses, motor lorries, motor taxis used in the business of running them on hire. Hire means 30. Normal purposes, for your business purpose you are using vehicle 15. Hire kit double, 30%. Okay, hire how much? 30%. Next, furniture and fittings, already I told you 10%. Try to remember at least some depreciation rates for your convenience sake. Block of assets. What do you mean by a block? Block means group of assets falling within the same class. Same class means furniture, all furniture should come under one category. Motor cars, all motor cars should come under one category. That is one block. Buildings, all buildings should come in one category. That is buildings block. Okay, two conditions should be satisfied. It should belong to the same class and same percentage of depreciation. Buildings, the two types are there: 5%, 10%, 40%. Three types. 5, 10 should not come under one block. All kinds of 5% buildings will come under one block. Okay. Next, there is a building depreciation also at 40%. Plant and machinery depreciation also 40% is there. Correct or not? Now you should not tell building 40, plant also 40, and I will include both into a block. No, here rates are same, but the class is different. So that's why block means two conditions should be satisfied. They should belong to same class which have the same percentage. Okay, two conditions must be cumulatively satisfied. Next one. Actual cost, basic analysis, 43.1 and second proviso. See, very important. Students will leave this. They will ask this unnecessarily. Like law paper, you will do summary. Okay, expected questions. Nonsense. Everyone tell you will believe and you will go. If I tell from bare act, you will postpone that. Always a right way is a right way. How many people throw stones against the procedure? A person who read the bare act will definitely win the race. That's what happened in the yesterday's law examination as well. You can ask the students how they're putting comment. Sir, you are telling in the video that paper came tough, but we didn't feel that. Whatever the concepts we discussed in the class or in the yesterday's session in the revision, sir, always correct method is always correct. Even though 1,000 students throw stones against me, I will not change that model because that's the right way. If easy paper comes in, you will anyway crack. Even in a difficult situation, you should be able to write the answer. Means go by a right procedure. Mistakes you are doing, continuously you are doing mistakes. You are going by summaries. You are going by whatever someone tells you, you are believing that. Please go by a right methodology. I am writing clearly section number, proviso number. You can go and read the bare act also na, if you really don't believe me. So please go by a right procedure. Don't go by summaries. See, actual cost. Sir, always what we are doing, if it is electricity generation, actual cost into percentage. What is actual cost? Second, WDV block will be calculated. WDV will be calculated through actual cost. Through actual cost. What is actual cost? Actual cost means you purchased an asset. For that, actual cost will be there. Na? Yes. If in that any subsidy came from the government or any person incurred any cost, that you reduce. Okay. Any incidental expenses are there, those you add. That will become the actual cost. That will become actual cost. Okay. Sir, incidental expenses, what can be added, what can be not to be added? Paid by specified modes. Actual expenditure incurred. See, machinery is there. Okay, that machinery is coming from Delhi to Chennai. Delhi to Chennai. For that, I need to pay 1 lakh rupee for a truck. Big machinery. It has to come from Delhi to Chennai. What to do with that 1 lakh? That 1 lakh should be added to the cost of the asset, into the actual cost. Okay. So, actual expenditure incurred will be allowed provided that should be paid by, that incidental expense should be paid out of, paid in the way of account pay check, account pay DD or electronic clearance system. Then allowable and added. Paid in cash, allowed, allowed. When allowed? If it is less than or equal to 10,000, allowed. If it is more than 10,000, then I will check, is it to one person? Yes, sir. Is it in 1 day? Yes, sir. Aggregate exceeding 10,000? Yes, sir. That much amount will not be allowed. Entire. For example, Mr. A ki I paid 20,000. Okay. Sir, 10,000 up to allowed. Balance 10,000 not allowed. No. Complete 10,000 will be disallowed. You can't add it to the incidental expenses. Next. Written down value. Now let us see. What is written down value? Because a written down value of the block into rate gives depreciation. So you need to know what is written down value. Written down value for any assessment year will be determined as under. Identify the depreciated value of the block. Depreciated value means technically opening balance of the block. Entire block your opening balance. Next, actual cost of assets acquired in the previous year falling in the same block. For example, I have building 5% rate. I purchase another building which is also again for residential purpose, for the purposes of my business. I'm using it for residential letting out or something like that, or I'm using for my own business purposes. 5% depreciation can be claimed. I can add. Total of 1 and 2 is called as a gross value of the block, also called as a gross block value. Also called as what value? Gross block value. So identify the depreciated value, opening balance. For that, add the actual cost of assets acquired during the previous year. Okay. Okay. So when I say assets acquired during the previous year, that asset acquired should be put to the use in the previous year. That's the meaning. Next, total of 1 and 2 is a gross block. Next, money received including scrap. Money received including scrap. Scrap means you did not get any kind of capital gain, etc. Just scrap value you got. Money received including scrap in respect of any asset in the block upon sale or demolition. When you make a sale, you will receive money. When you demolish, you will get the scrap. Okay, you will get the scrap. Then that will become WDV of the block of assets for that assessment year. Okay, but most important observation from the capital gains chapter here. See, identify the depreciated value, opening value of the block, actual cost of assets acquired in the previous year falling in the same block. That becomes a gross block. So next, money received means sale proceeds. That's the meaning. In respect of any asset in the block upon sale or demolition. Okay. Now, 3 situations can occur. You sold na, 4th step. Okay. So versus gross value, 3rd step. What is the gross value? Opening balance plus purchases is the step 3. Sale value is step 4. 3 situations can occur. Situation 1. Sale value is more than gross value. Less than gross value. This value is less than gross value. Let us say for example, gross value is 100 rupees. Sale value is 70 rupees. Now what is there? 30 rupees. That 30 rupees into percentage will become the depreciation for that year. Sir, sale value and gross value both are same, sir. Sale value is there na, here. This and this both are same. What does it mean? Opening balance plus purchases. Opening balance 70. Purchases 30. Total 100. I sold one of the asset at 100. That's it. Value becomes 0. No depreciation. Okay. Very, very important is situation 3. Listen carefully. Sale value more than gross value. Gross value of the block comes to 100. Sale value of the block is 120. Gross value is 100. Sale value is 120. You can't have a negative depreciation. Na? Therefore, up to 0, I will take it. Beyond 0, extra 20 rupees is there. Na? That 20 rupees will be called as STCG. Always STCG. Why? You know the reason. So up to gross value, adjust to gross value and make it nil. Beyond the gross value, it will become the STCG. Okay. Sale value, okay, is not sale consideration. It is sale consideration minus incidental expenses. Here, money received, I said, nah, that's why they use the word money received. Means what? Sale value minus or sale consideration minus incidental expenses. That will become the sale value. It is held in CAT versus SR Shipping Limited, CAT versus Hindustan Motors Limited. Sale consideration is not FMV, is not SDV. It is the actual sale consideration net. This was held in CAT versus Cable Corporation India Limited, Composites India Private Limited versus CAT 2024. Mumbai Tribunal has given a judgment. Chances there it can be coming in exam. If asset is demolished but not sold, then the resultant will be scrap value. Hence, if scrap is considered, sale value cannot be considered and vice versa. Okay. See here. Let us see one illustration. On April 1st, 2024, depreciated value of the block at the rate of 15% is 80,000. It consists of plants A and B. The assessee purchases plant C, rate of depreciation is 15% on December 28, 2014 for 30,000 and sells a plant A on May 3rd, 2024 for 1,80,000. Calculate depreciation and depreciated value for the year ended 2025. See the question, I am pausing the video. Okay, or you pause the video, see the question, try to answer. So let's see the answer now. Depreciated value of the block and opening balance as on that particular date, depreciated value of the block is rupees 80,000. Okay, 80,000. Plant A and B. Plant A and B. Block 2 assets are there. It consists of plant A and B. Assessee purchases plant C. Assessee purchases plant C. Rate of depreciation is how much? 50. So actual cost of acquisition plant C 30,000. Total together gross value is how much? 1,10,000. Now he sells plant A. He sells plant A on May 3rd, 2014 for 1,80,000. Okay, 1,10,000 is the gross value. How can I reduce 1,80,000? Therefore, up to 1,10,000 I will reduce and make the block value 0. The balance amount is there, na? 1 lakh 80 after that 70,000. That will be treated as short-term capital gain. Short-term capital gain. Illustration 2. Exhibitor owns two plants, plants A and B on April 1st, 2024. Rate of depreciation 15%. Depreciated value of the block on 1st April 2014 is 2,37,000. Two assets are there. The company purchases plant C on May 31st, 2014 for rupees 20,000 and sells plant A on April 10, 2024 and plant B on December 12th, 2024 and plant C on March 1st, 2025 for 10,000, 15,000, 24,000 respectively. Okay, this is the question here. Read the question before we go into solution. So pause the video and see the question first. Okay, in this question, what is the new point? See here. They already have plant A and B. Plant A and B. 2,37,000 is the opening value of the block, depreciated value. Okay, 15% rate. The company purchases plant C for 20,000. Okay, and sells plant A on April 10, plant B on December 12, plant C on March 1st at 10,000, 15,000, 20,000. Here, if you observe, already in the block plant A, B are there. Now we added plant C. In the same year, I also sold. Block became empty, though amounts are there. Though what is there? Amounts are there. But we will not consider if the block has assets and all the assets in the block are vanished. Even though block have some value, we treat that block as a dead block only. See, depreciated value 2,57,000. Money received on sale 49,000. WDV of the block 2,08,000. On the 2,08,000, you should not claim 15% depreciation. Reason is depreciation can't be claimed since block ceases to exist, though there is a value. Just for the namesake, value is there, but assets are not there. Na? What you will put to use? Empty thing you can't put to use. So that's the point. Next, if the asset is put to use for less than 180 days in a year of acquisition, okay? See, very, very important adjustment to remember is whether it is put to use or not, we need to check only in the year of acquisition. Year of acquisition. I will give you an example. I purchased an asset on Jan 1st, 2025. Jan 1st, 2025. And for the financial year 24-25, previous year 24-25, it was put to use. It was put to use. But for less than 180 days, I can claim depreciation at the rate of 50%. But don't think that like in accountancy, Jan, February, March, 3/12. No. Even if you put to use for 1 day, for that year, I can claim it 50% directly. How much? 50%. Half depreciation you can claim, if not the full one. So, if an asset is put to use in that particular previous year for less than 180 days, okay, less than 180 days, then you can claim 50% of the total depreciation. Means if the rate is 15, you can claim 7.5. Rate 40, you can claim 20. Rate 30, you can claim 15. Understood the logic now? Now, let's back to the main point. So, what will happen here? If the asset is put to use for less than 180, half depreciation will be given only in that year of acquisition. Example, Jan 1st, 2025, I purchased an asset. Okay? Which year? 24-25. That year, I did not put to use at all. If you do not even put to use, now no depreciation can be claimed, even though you purchased it. Even though you purchased it, since you did not put to use, okay, you can't claim depreciation. Zero depreciation. Okay, since you did not put to use 50%, not even put to use, zero depreciation. Next issue, April 10th, I really used it. I started using it. I put to use, active use and not passive use. Direct I kept for usage. Now, I kept for usage not on April. Let's say I kept in use on December 2025. December 2025. Even now, you can claim 100% depreciation. Sir, depreciation, December means December, January, February, March, only 4 months, sir, less than 180. That less than 180 you should see only in the year of acquisition. Year of acquisition is 24-25. Okay, 24-25. 25-26, wherever you put to use, whatever time you put to use, 100% depreciation can be claimed. Asset is acquired during the previous year. That is put to use for less than 180 in that previous year. Depreciation cannot be claimed at actual rate, but claimed at 50% of the actual rate. Okay. Date of purchase 10/4/24. Date put to use 10/1/25. Now purchased okay, but put to use only after 180 days. So 50% only will be allowed. Next one. answered illustration. Read the question first. Y Limited purchases a plant. Rate of depreciation 15% on May 10th, 2024. It is put to use on Jan 10th, 2026. Okay. Purchased on May 10th, 2024. Put to use on Jan 10th, 2026. In this case, the plant is acquired during 24-25 and in the year 24-25 it is not put to use at all. Therefore, for the previous year 24-25, no depreciation is available. No depreciation is available. Okay, but put to use in which year? 2026, under 25-26, Jan it put to use. Even though it is less than 180, full depreciation, because that's not the year of acquisition. For the previous year 25-26, usual depreciation will be available as asset is not acquired during 25-26, although it is put to use for less than 180 days. This is an answered illustration. Next, illustration 3. Illustration number 3. X Limited owns two buildings, A and B, on April 1st, 2024. Rate of depreciation 10%. Depreciated value 14,15,700. It purchases it purchases on December 1st, 2024, building C for 3,10,000. Rate is 10%. So we can add both into block. And sells building A during the previous year 24-25. Say on Jan 10-25 for 8,70,000. Then depreciation for the previous year 24-25 shall be determined as under. Answer also given. This is also a self-answered illustration I have kept. Read the question first and understand the discussion. So I hope you read the question. See here. Depreciated value of the block on 1st April 24 is 14,15,000. Purchases 3,10,000 building C. Very good. Okay. Total became 17,25,000. But we also sold building A during the previous year. Okay. For 8,70,000. Okay. Return on value 8,55,700. 8,55,700. The beauty of this question is it explains one very, very important concept. See, what is the block value? What is the block value of the existing assets? 14,15,700. What is the cost of building? 3,10,000. Total became how much? 17,25,700. Okay. What I sold? Plant A I sold. Which I sold here? Plant A I sold. Means which plants are still there in the block? Plant B and C are there. Totally, the gross block value is, the return on value of the block is 8,55,700. Correct? So, gross block, the return on value became 8,55,700. But, very, very important point I said, now listen. In this 8,55,700, two assets are there. One is B, another one is C. One is B, another one is C, because A is already sold. But in that, C is purchased on December 1st. So on this 3,10,000, they will not allow full depreciation. Only 50% will be allowed. So 5%. So 3,10,000, 5%. Remaining balance, remaining rate of 10% will be allowed. Total, that became a depreciated block. Okay. And this is self-illustration that we can do later. Up here, I think everyone understood, right? Next one. Now we are going into a different dimension of concept. From section 32, we are going into 43. Very, very important for exam. I'm warning you before you write the exam. Tomorrow in exam hall, if you see adjustment on this, okay, you should say thank to me. If not also, you should, because this concept people are leaving, at least that knowledge you will gain. But 99.9% a question has to reflect. Okay, because it is having some amendments also. Sorry, anyway. Actual cost. Why we are reading about actual cost? We will take the depreciated opening value of the block plus we will add the actual cost of assets. At that time, what actual cost we need to add is a query. So in that, segment 1, assets used in scientific research. Assets used in scientific research means you are purchasing an asset which once used for a scientific research. So actual cost equal to actual cost of the asset minus deduction taken under section 35. Means 35 section already have you taken a deduction? Yes sir. How much? For example, I have given one example. X purchased a plant for 80,000. Okay, for scientific research. Since it's a capex, 100% deduction claim. X shifted the asset to factory on 1/1/24. Okay, now the scientific research asset has now become a business asset. In this case, we will give you actual cost. You can add, but not everything, because already you have taken 100% deduction. What is the actual cost? 80,000. How much deduction you claim? 80,000. Now actual cost will become 0. Hence, no deduction can be claimed. Topic number 2. Actual cost upon conversion of stock in trade into capital asset. You are converting the stock in trade into capital asset. Okay, stock in trade into capital asset. And a business asset is now becoming an investment asset. In that case, what is the actual cost of a business asset key? You, for example, if it is a stock in trade, you will not claim depreciation. But if it is a capital asset, you will claim depreciation on that na, if you use for business. Therefore, we are converting stock in trade into capital asset and we want to claim depreciation. Okay, at what rate? What is the actual cost? FMV of the asset on the date of conversion. Number 3, most important, assets acquired by way of gift or inheritance. Okay, if I get the asset for gift or inheritance, for example, X gifted Y a property. Okay, X gifted Y a property. For example, a machinery. X gifted Y. Okay, Y acquired that asset. Actual cost is nil, but like that we will not consider. Okay, reason is very clear. Who gifted you? A gifted B. What A will do with that asset? He might use it for his business. If he do not gift, what would have happened? A might have claimed depreciation. Correct? Even though the other person is taking the property as a gift, even though cost of acquisition is 0 for him, I will take actual cost not as nil. I will take the cost of acquisition or that particular asset actual cost as actual cost to the previous owner minus depreciation allowable to the assessee on that asset independently. Don't include that into the block. If that asset is there, for example, A purchased a plant, 15% depreciation. He used it for 3 years for his business and gave it to his friend as a gift. That friend is using that asset in the business. Now, you should not tell for his friend who is having a business, actual cost is 0. No. Government intention is very clear. If you do not claim, he would have claimed already. So, anyway, only one claim of depreciation is happening, no problem. Actual cost to the previous owner minus depreciation allowed to him on that asset, reduce that, on that you will get the value. FMV is not relevant. Gift or grant in cash, not considered. Gift of asset considered here, not cash gift. Assets distributed on account of partition of HUF do not amount to gift or inheritance. This was happened in CIT versus PN Krishna here. See, I have one very good illustration on that. Assessee is Mr. X. Assets as on 1/4/22, A, B, C 15%. Details of transaction as under. Depreciated value of the block. Okay, 1,55,000. Cost of plant D put to use on 111, 1 lakh. So sale value of plant A, 1,97,000. WDV this much. Minus depreciation for 22-23, 58,000 will be there na, into 7.5%. Sir, why we have taken this way? See here. Depreciated value of the block. How much? 1,55,000. How many assets are there? 3 assets are there. A, B, C. How much value? 1,55,000. What you purchase now? Plant D I purchased. Okay. What is the cost? 1 lakh. Totally, how much it became? 2,55,000. 2,55,000. I will separate and I will write for your understanding. 2,55,000. In this 2,55,000, how many assets are there? A, B, C, D. 4 assets are there. Very good. Now, in that, plant A was sold for how much? 1,97,000. 1,97,000. Okay. In this 2,55,000, 1 lakh is the new asset. I will write this way. See. Plant A, B, C. 1,55,000. You will do mistakes here. Please listen carefully. Plus actual cost of new acquisition. D. Okay. Total how much? 2,55,000. Okay. Now listen. Plant A is sold for 1,97,000. 1,97,000. So balance is how much? 58,000. Now listen. 58,000 consists of which asset? Here I sold only plant A. You can see here. Okay. I sold only plant A. Now like this people will understand. A, B, C assets are there for 1,55,000. A and they acquired D. Totally in this 2,55,000 A, B, C, D are there. In that A is sold, B, C, D are there. Wrong. See, I will break this into two sub-blocks again. Two sub-blocks. See, 2,55,000 two blocks are there, sub-blocks. Block 1 is the old one. Block 2 is the new acquisition. Okay. 1,55,000 worth block la one asset is there that I sold for 1,97,000. Means if this 1 lakh is not there, see here, like this I will explain. If this 1 lakh is not there, what would have happened? 1,55,000 is the gross value of the block. It is sold for 1,97,000. Short-term capital gain might have come. Okay, no depreciation. What will have come? Short-term capital gain might have come. But now it has become 58,000 value. We can claim depreciation still. I repeat again. 1,55,000 is the value of ABC block. D is added. I will call it old block and new block. Both can be added, undoubtedly. That's a gross block. So 1 lakh, if at all this is not there, what would have happened? 1,55,000 block will become 1,97,000. It vanished. Block vanished because though assets are there, value is 0. Okay, up to 1,55,000 we will claim depreciation. Beyond 1,55,000 up to 1,97,000 we will arrange a short-term capital gain to that. Correct? But short-term capital gain did not come. Still there is a WDV. Still there is what here? WDV. This WDV came because of which asset? Because of asset D. Because of whom? Asset D. Therefore, lawmaker said that since the only reason of getting the value is because of asset D, consider that entire 58,000 value only for D, not for ABC old block. Therefore, we will give only half the depreciation because it is put to use for less than 180 days. So 58,000 into 4350, yeah, so into 7.5, 4350, WDV. Again 2324, 8058 depreciated value of the block. Plant D is gifted by X to his friend on December 20, 2024. FMV is 86,000. Irrelevant. Plant D gifted by X to his friend. Okay. Details of Y. Y 1424. Plant and machinery already he is having. Depreciated value 90,000. Plant D was put to use on the same day. Depreciation in the hands of X and Y for the year 24-25. See, in the hands of X, very clear, yeah. 45,602 is the opening WDV. Opening WDV. What are all there in this? I am having plant B, C, D. B, C, D. Okay. B, C, D, this much. I did not purchase anything. I sold. Okay. I sold this particular asset for no value. I gave gift. 0 value for me. So 45,602. Depreciation will be 15%. This is the closing WDV. But for Y, let us see. Let us see this. Actual cost of the plant to D. Plant of to the old person. Who is he? Mr. X. For him, what is the actual cost of asset to D? 1 lakh. So 1 lakh minus, he would have claimed depreciation for 22-23. Half. Next to full 78,600. This will be taken as actual cost for the new person purchasing it. Gross value, depreciation, over. That's it. Very, very important illustration. If comes in exam, you will not write if you don't read. Okay, next. Very important, second one. Second-hand asset I purchase. Which one here? Second-hand asset. Conditions to be satisfied. Asset is used by the previous owner for his business or profession. Such asset is acquired by the assessee during the previous year for his business or profession. Okay, first one. Asset is used by previous owner for his business or profession. Such asset is acquired by the assessee during the previous year for his business or profession. One person has already used it for his business. Again, assessee is taking. He is also using for his business. What are the conditions to be satisfied? If AO do not object, actual cost is actual cost of acquisition by assessee from the previous owner. Okay, at what rate you purchase, that will be. If AO objects that price, if AO is satisfied that acquisition is considered at an enhanced cost, intentionally they are showing it enhanced cost just to increase the depreciation value and thereby reduce tax liability, he may in consultation with the joint commissioner consider such value as per the circumstance of the case. Second-hand machinery, whenever you purchase that, whatever rate you purchase, that will be the acquisition rate. But if AO said that intentionally you are showing it a higher rate for the second-hand machinery to claim higher depreciation, then I will object to you. I will consult JC and decide the value. That's it. For that, this is the example I have given. Take pause to the video, see the question and answer. This is the question. For this is one part. This is second part of answer. Okay, I'm going into next one. Actual cost in case of reacquisition of transferred assets. Sir, what is this concept? What do you mean reacquisition of transferred assets? I transferred an asset to one, I purchased, sold, again I repurchased. Okay, conditions. Assessee owns an asset in the past. Such asset is used for the business. He ceased to be the owner of that asset by reason of transfer. Same asset is reacquired by the assessee. That's the concept. Actual cost of asset reacquired. Actual cost to the assessee when it was first acquired. Originally when you purchase. Depreciation allowable on such asset. Depreciation allowable on such asset. Okay. Net actual cost. If you did not transfer, you kept it with you only. What will be the value? This much. That much depreciation we deduct. Or cost at which it is reacquired, whichever is lower. If it is lower, now less depreciation only you can claim. Department will collect more tax. Remember this. Next. Interest on capital borrowed for acquisition of asset. Explanation number 8 to section number 43. Date of acquisition. Okay. From that date put to use, any interest you paid, add to the actual cost. Okay. After put to use, any interest should not be added to the actual cost. Personal building transferred into business asset. Again, another concept. All these are in 43 section. Yeah. 43 section, all these are provisos. There are 13 provisos. Sorry, explanations. There are 13 explanations are there. In that most important 8 explanations I bifurcated. Okay. Personal building transformed into business asset. Assessee owns a building used other than for business. Later converted into business asset. Asset is put to use in the previous year. Result. Actual cost of the building. How much to take? Actual cost to the assessee on the date of acquisition minus depreciation allowable if asset is put to use from the inception. Actual cost will be the remaining part. Means take the building cost, whatever you purchase. From the beginning, you did not use it for business. Now, if you would have used it for business, how much depreciation you might have claimed? That much is allowed to be deducted. Okay. Sir, why, sir? Originally, it is taxable under IFHP. IFHP law on that building, already you might have claimed a standard deduction of 30%. Okay. Standard so 30% you might have already taken. If I do not consider this adjustment, again you will start from the original value and claim depreciation. Mean you are taking double benefit. Already there you taken the standard deduction of 30%. Again, if you start from the very beginning, it becomes a paratha scene. In one movie, he will eat paratha, 50 paratha he will order. Who will eat 50 paratha? He will be gifted. He need not pay anything and some money also he will be paid. Also as a bounty. That person will eat. This fellow intentionally draw the lines as if you have not completed. He will erase that. Finally, he will tell, no, I will start from the beginning again. Like that, here, you already use it for your residential purposes or IFHP taxability. There already you might have claimed standard deduction. After claiming standard deduction under IFHP, you carried onwards for around 5-6 years. After that, you turned into business asset. Again in business asset, if you claim deduction, from the very beginning, if you start again like that paratha scene, you are taking double benefit or not. That department don't want it to allow. Next. While considering rate of depreciation for entire period, it should be the rate as on the date on which asset is put to use. Means, when I purchase the building, 10% is the rate declared in the rules. Now it is 5%. Now what to do? Which rate I need to take? From the beginning, you asked me to deduct at what rate? At that new rate. Put to use date, what rate is there? That rate you should apply from the beginning and you need to reduce. Very, very important. Read this for 2-3 times and understand it. Explanation applies only to building. Conversion should be as a business asset, not as a capital asset. Next. Additional depreciation conditions. When you can claim additional depreciation, assessee is engaged in business of manufacturing and production of any article or transmission of power. Assessee acquired a new plant and machinery and installed. Acquisition is not important. Acquisition and installation is important. That should be new, not a second-hand machinery. Okay, you should be in manufacturing or generation of power. The following cases do not claim additional depreciation. In these 4 cases, no additional depreciation. What are those? Plant and machinery used by any other person before its installation. I will not give. It is losing its new point. It should not be used for office or residential accommodation of any person. Office appliances, road transport vehicles, such plant and machinery is not a ship or aircraft. This you need to remember. Very important theory question. Amount of additional depreciation. Listen, additional depreciation will be given in addition to normal depreciation. Therefore, whenever question comes in exam, first take additional depreciation calculation, then calculate normal, then show the total. Okay. Additional depreciation will be given only once, only in the year of acquisition. Installation made in backward areas in Andhra Pradesh, Telangana, West Bengal or Bihar. In these states, they recognize some backward areas. In those areas, if installation is made, not for the full state there are so many developed areas will be there. If you install, because of division of states that was given, West Bengal, Bihar, it is because of insecurities there. So division happened between two states. Therefore, at the time of division, they have brought this rule. At least for next 10 years, we do that. 35% will be additional, or else 20% of the actual cost. If you use for less than 180 days in the year, 50%. No additional depreciation other than plant and machinery. No additional depreciation on second-hand assets. No additional depreciation on intangibles. Additional depreciation is given in addition to normal depreciation. Okay. Click the question. Then you see the answer later. Okay, this is not the time. I have given full illustration. You can see. Okay, pause. The answer. Step 2, normal depreciation. Step 3, total depreciation. Just a calculation, nothing great. That's why I am not doing this. Okay, see illustration. Computer including a software, 35,000. Computer UPS, 8,500. Computer printer, 12,500. Like that they have given. Correct? See here. Books, how much? 13,000. Other than annual publications are of 12,000. Okay. Anyway, we saw the rate now. Whether it is annual or non-annual, the depreciation will be on the books will be allowed at 40% rate. Office furniture acquired from a practicing CA, 3 lakh. Second-hand machinery. Okay. If no detail is available now, we will take the cost of acquisition as the actual cost. Laptop 43,000. Just to put to use, you need to see. Identification of block. First, block identification important. Here, 2 blocks. Furniture, plant. Plant la computers, books will come. Okay. So, rate 10%. Rate of depreciation. Furniture, put to use for more than 180 days. Yes, no, no. On the dates. So, rate allowed also I have written here clearly. Block 1 furniture. Block 2. Like this, you have to write the answer. Okay, very important. Unabsorbed depreciation. First, whenever profits became negative, only because of depreciation deduction. Profits became negative only because of depreciation deduction. I repeat, profit became negative only because of depreciation deduction. So if the depreciation deduction only resulted in loss, that means if you don't deduct depreciation, profits will come. Just because of decreasing the depreciation, loss has come. That means the only loss is because of depreciation. We call it unabsorbed depreciation. I added back depreciation. Still loss is there. That part of loss will be treated as unabsorbed business loss. Say for example, my loss is 1 lakh. Okay. In the depreciation is 70,000. Means if I add back that 70,000, still I am having a loss of 30,000. 70,000 is called as unabsorbed depreciation. 30,000 is called as unabsorbed business loss. Next, step 1. Let us understand. Depreciation of previous year is deductible from income under the head PGBP. Depreciation of previous year is deductible under the head PGBP. So, whenever depreciation is there, it is deductible from income under the head PGBP. Step 2. If step 1 is not fully deductible under the head, it is deductible under other heads except IFHS and income from the head salaries. Salaries, though, you should not deduct. Means there are 2 things. Set off, carry forward. Set off means same year, carry forward next year. So, can I set off unabsorbed depreciation with any other source of any other head of income in the same year? Yes, other than salary head. Next. If step 2 is still unabsorbed, it can be carried forward to the subsequent years by the same assessee for indefinite years. Any number of years you can. Next. no time limit is fixed for the purpose of carry forward of unabsorbed depreciation. It can be carry forward to indefinite years. Manner of set off. Business income is there na. First, reduce current depreciation. Current depreciation you have to reduce. Second, brought forward business loss. Third, unabsorbed. First this, next this you should not do because common sense. A fool only will do. Unabsorbed depreciation ke time limit is not there na. Infinite years you can do. But business loss has to be set off in 8 years. When something has to be closed in 8 years, na, first fully claim that. Anyway, this will be available for infinite years. Na. So business income minus current depreciation, brought forward business loss, unabsorbed depreciation. So if in any subsequent assessment year there is no unabsorbed business loss, then current depreciation and unabsorbed depreciation can be added. So first, profit should be calculated after deducting the current depreciation. Okay. After that, not sufficient, unabsorbed depreciation is there, adjust to the other heads in the same year. Even then it is there, carry forward for indefinite years. Clarity point number 1. If business loss is also there, what to do? First, business income you take. Business loss should be set off only against business income. So business income you take. First reduce current year depreciation. Minus reduce the brought forward business loss. Then you reduce the unabsorbed depreciation. For this, illustrations are also taken. Just I am keeping for you. Illustration 1, illustration 2. I have given full analysis also. Pause the video and see. Okay, that's it. With this, we completed complete depreciation aspect. But depreciation, if asset is purchased from a foreign buyer, that adjustment I did not cover here. Please look into that. Exam that question can come. Foreign purchase. If you purchase from a foreign country, how to be treated? One study material question is there. ISM. Please don't miss that. It will come in exam. Okay. Please also look to that adjustment. Enough. Okay. Thank you.